Earnings season is about to start in the US, so we're going to take a look at the Nasdaq. And I'm telling you, there are some serious warning signs forming in the charts that you need to know about. We're going to take a quick look at the Max 7 stocks, and I'm going to give you my two favorite Max 7s right now. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and months. So, earnings season about to start. Let's take a look at the Nasdaq index, and here we go. So, I'm sure you're familiar with the uptrend that has been in place since the lows of 2023. As you can see, beautiful uptrend, tested successfully multiple times on the lower side and on the upper side, including this bull trap that we had right here. You can also see mid of December we reached the upper end of the channel, and since then we have corrected. Not only that, we have also broken the short-term uptrend that has been in place since August, when we again tested the uptrend, the lower end of the uptrend successfully. That's broken and confirmed. So, on top of it, we have lower highs and lower lows. This all looks pretty bearish and dangerous. We have a big gap open right here, and then we have this horizontal zone right here, which collides or correlates, better to say, with the lower end of the uptrend channel. So this is the area that I think will draw the market towards it. Now also, look at the RSI. We're below 50, so selling dynamic is picking up speed. It's just something to notice. This is not something to really trade off. The only thing that in the RSI that's of any value to trade off are negative divergences. But I want to show you something else that, to my surprise, not many people are talking about yet. This is a chart since 2020. And if we take the lows from COVID and draw a parallel through these lows right here, as you can see, we tested it 3 times. And we draw up the line. Look what we get. We get another channel that nobody's talking about. I'm going to leave it here in yellow because we got enough green on the screen already. Now, if we zoom in, you can see we tested here to the penny. We tested here to the penny. Broke out bull trap. Makes complete sense in December, right? When only retail investors were really in the markets that tried to push the market higher. Got trapped. Now we're back in the channel. This is dangerous. We need to keep this in mind, because the last time we tested the upper end of the channel, we went all the way back down. We tested it here. We didn't go all the way back down. That was a surprise, but we did go down significantly. So this looks very much just like the start of a correction. However, we have to keep in mind, it's earnings season, so anything can happen. Now, let's run through the Max 7 stocks and see what they look like. Let's start with Apple. This is what Apple looks like. We have the long-term uptrend from COVID. We have a parallel upper end of the channel established. We kissed that one in the beginning of end of 2024, and then we've gone down sharply. We've broken the uptrend that has been in place since April. That is not great. And we're fighting right now with the upper end of this sideways channel that we chopped in for the majority of the summer and the fall. So is Apple in buy here? We're at almost oversold territory. So you don't want to short Apple right here, but with the PE it has, you don't want to buy it either. It's really just a hold at this point. If we would get a test of this broken uptrend, the upper broken uptrend, and a reversal, maybe I would short it, but right now I would just wait and see. Amazon. Looks better, right? Definitely looks better. Just recently made a new high. The blue line here, that's the old all-time highs. So we are well above it. We broke out. However, we haven't confirmed the breakout yet. Are we going to go back down, test it, and then rally off it? It would offer a solid $30, so it's about 10 to 12% downside potential. Am I buying it right now? No, there's no reason for me to jump in and buy it. Am I going short? I'm not going short when we're just reaching this trend line right here. So again, same thing, wait and see. Microsoft. Guess what the result will be? Wait and see. You can see how these things happen, right? This is the long-term trend of Microsoft, beautiful uptrend. Then we have within this major uptrend, we have these uptrends from the lower end to the upper end. We did it here and we did it here. We broke it, right? Kind of similar to here, retested it. So you can see we retested it. It was by then a triple resistance, rejected it, just like here. And now we're basically going sideways. Now we're making higher highs and we made a higher low here. That's true. But overall, we're basically running in this sideways channel. Do I need to buy Microsoft right here? No, I don't. What about Nvidia? Head and shoulders formation still in play. It was almost triggered, as you can see here. But then the bulls regained control, pushed it up. Almost were able to neglect it, but we got this nasty engulfing candle, and we have sold off after it since. Nvidia usually reports late in the reporting cycle. We already got the big news from CES in Vegas. So if the overall market is not doing anything, I don't see Nvidia doing anything. But you don't short it now. Now you don't short it until it goes even below this confirmation attempt. So really, it is not even interesting for a short under 127. So what? Oh, Tesla. Let's look at Tesla. Okay. Yeah, that's kind of nowhere. We broke the uptrend after the election. We sold off after it. That makes sense. But we got the support zone coming up right here, so not much downside potential. We already had the bad delivery numbers, but we also know that Musk is a super promoter. So do you want to be short going into Tesla earnings? I've done it in the past. I made some really good money of it. I lost some really good money. That's what I'm saying. It is right now a wait and see with most of these stocks. So who are my two favorites? Well, it's Meta. Meta looks really good, ladies and gentlemen. Look at this. Uptrend, absolutely intact, and we're going into an upsloping triangle formation right now. The buy signal is the break above this yellow line, so something around 640, 641. If that happens and the overall market looks solid, that is the long you want to take in Meta and the Max 7 stocks, and I also really do like Google. But Google doesn't look as good as Meta, as you can see here. Even though it more recently made a new high, we have this trend line that goes all the way back from the highs of 2022. You see, touched it here, tiny bull traps trying to break out, always get caught back in. So this line is significant. We kind of hit it, and now we're hovering below it. We got this monster gap open, so that prevents me from going long. Also, obviously, the overall market that I just showed you and the valuations, which are really high, and that the market is starting to price in that we might get less rate cuts than anticipated just a few months ago. B of A now thinks we might not get any at all in 2025. So that needs to be priced into the markets. The only stock you need to have really on your radar right now, long or short, is Meta, in my opinion, on the long side. But really, I would be cautious and I would sit out the earnings season if you're a swing trader. That's what I do. If you're a day trader, this is paradise. And the way you do it in day trading is you basically look at the companies that report after the market closes the day before or before the market opens, and then in the pre-market you look at certain levels and how the market reacts to the reports, and even more important, the outlook. And that is the thing that makes this earnings season so unpredictable and why I'm staying completely away from it, and I will react and not predict, is you can predict the earnings. Maybe you're even good enough to predict the outlook, which is super difficult. But nobody can predict how the market is going to react to it. In the last year, I was talking to a couple of people, and there was one analyst who actually several times predicted the outlook of the company correct, which is super impressive. And the stock still went into the opposite direction than he said, because the reaction of the market was different. And that's why right now this earnings season is a gamble, because the numbers almost don't matter. It's all in the outlook. We don't know what the companies will say, and even worse, we don't know what the market will say. That is too many uncertainties for me to trade in a market. If you want to do it, again, earnings seasons, that's a day trader's paradise. But be careful with the overall situation that I showed you in the Nasdaq, especially the second long-term channel. Let me show this to you again real quick. That not many people are talking about yet. This big yellow channel that I put in that goes all the way back to the COVID lows. If we go to the midpoint of the channel, or the upper trend of this zone right here, this would be the support zone, we're talking about a 10% downside in the index, and that would still not destroy the overall uptrend, right? But this is a warning sign here. This is something where you want to be cautious and where you want to look at other parts of the market that will be making money. We'll be going to talk about them here at Hot Trades of the Day. Have a great start to the week. Bye-bye.